Hello, friends. This is E. Giuliano, and it is the wee hours of the morning in the UTC time of the 14th of January. It's a Friday. Yep, I'm here to share with you about the Bitcoin price chart. Already some turnaround, and I think just maybe an update, I would say, and just to fill in some gaps from the previous video. So if you didn't watch that one yet, definitely take a look at it and let me know what you think. But also take a look here. I'm going to share the screen. And well, one thing that I didn't miss particularly because it hadn't closed yet is the bearish engulfing candle of the 13th. So this candle itself is quite a turnaround candle immediately. It just broken on the daily, this smaller degree here, 0 to 2 trend line. We'll take a look at it. And I just wanted to mention this bearish engulfing candle here is quite a significant move. It tells us that the move up might not even reach this 46,000 level, or then again on a daily, maybe this is part of the move down that then we go up. But yeah, this turnaround candle here doesn't really give confidence. That's kind of where I'm going with that. So that's one thing to consider. But what I wanted to fill in here is more so on the 4-hour price chart. Because of this considerable turnaround already, then in that case, maybe maybe it's time for tracking the 2 to 4 trend line. Okay, so we're going to track the 2 to 4 trend line, and what that'll be is we previously had in this green degree the 0 to 2 trend line. Okay, and now we're saying, all right, there's a clear turnaround here. What does it mean to track the 2 to 4 trend line? Well, similar as the 0 to 2 trend line, when you see that the impulse is now correcting, whenever it turns impulsive again and it no longer interacts with this trend line, it has gone impulsive, then this is where you turn around, and that's your end of your 2 wave. So same thing here. Wherever now we were to take, we don't worry about the 0 aspect anymore. Well, oops, not that. Let's get a little bit intimate here. All right. So we'll take this 0 to 2 trend line and we'll bring it to the 2 area, okay? And we'll say now that we've broken this 0 to 2 trend line, we can start fishing it towards where might be the end of the 4 wave. We don't know yet because either in price okay, or just in time, okay, it might break this trend line that's created with this touch point here. Okay, it could break it. So then you just keep moving that trend line until you find the next impulse, and now you have your 2 to 4 trend line. And the importance of the 2 to 4 trend line will be when this potential 5th wave is over, we'll know that we'll have confirmation because of a significant breakout of this 2 to 4 trend line, and also of the level where this 5 wave will have started, and it'll have broken out that distance in a significant time frame, so in a short enough time frame. So that'll give us some confirmation as the Elliott wave, Neo wave logic of things. So wow, yeah, that's it. I've moved this. It was previously here, 0 to 2 trend line, so to speak, and now we're moving it. It's becoming a 2 to 4 trend line. We don't know where that's going to live. Okay, we don't know where this 2 to 4 trend line exactly is going to live. Let's change the color, 2 to 4 trend line. We don't know because, yeah, maybe some more time is needed. And even if the price doesn't reach this level here, but it still goes this way, then we keep moving the trend line until boom, we have our 4. And then we can measure and look at the 5, potentially where it's going, and just do further analysis. That's what's been helping us so far. This needle wave logic has been helpful. But again, it could go either way, right? This thing could be zigzagging like nobody's business, and we are going to 46K. Now, having said that, that's where I also, in the previous video, really, I missed about the fib retracement levels and the Ichimoku and Bollinger Band for some just confirmatory sense. But definitely the fib retracement level, just to get a sense, because look, yeah, it's okay that potentially that this is already moving back into this overall big red one wave, okay? But you know, it's more on this local level here, this green degree. How much is this third wave going to retrace? Be retraced, I should say, by the fourth wave. How much is this third wave down going to be retraced by the fourth wave? I'm going to just get rid of this for now. Yeah, because it's just following these numbers anyway. So, but it relates to the time frames. So in fact, you know what? Let's just hide it for now, and we'll remember that it's there. Just because why redo something? All right, now if we go back a little more, we can say, all right, with this situation, you know, the fourth wave shouldn't be retracing all of the third wave, really. I mean, we're not in a terminal fifth wave, even of the small degree yet, so we technically shouldn't be having that kind of activity. Having said that, this red third wave is, yeah, no, that's fine, because the fourth wave, the red fourth wave, hasn't started moving into this one wave, and even if it does, that's part of a terminal, bigger degree terminal impulse for this potential incoming C wave. So yeah, anyway, the C wave that we're potentially involved in as part of this big flat pattern. So fine, let's check a wave 4 phase. Wave 4 fib retrace on this third wave, potential third wave. But yeah, here's the thing. I can say with confidence that I think the third wave is over because that 0 to 2 trend line was broken. And now that the 0 to 2 trend line was broken, now we can pretty confidently say that we've moved into a fourth wave on this green degree. Okay, so in that sense, now let us retrace this third wave with the wick. Boom, it's like it's a 61.8% retracement now. So it's already pretty deep in terms of a trending move. If we're trending down still, then roughly the 61.8 should be holding. And so that's one thing that I didn't look at. And then the next thing that I didn't look at are the Bollinger Band and Ichimoku cloud. Now the Bollinger Band itself, you know, if we get in there, it's going to get a little messy, but the price went up to the Bollinger Band on this 4 hourly, and rejected here, came down, and then instead of impulsing higher and really spreading the Bollinger Bands, it rejected here. So that Bollinger Band, it was basically going from bottom to top. It moved up a little bit, expanding it, but maybe that's done for a little bit now, and we are again finished a fourth wave, or if anything, we are, you know, chopping within the fourth wave as we fish our 2 to 4 trend line towards where it will eventually be. But yeah, and now considerably on the 4 hourly level, the price is below the Bollinger Band 20 period moving average. So it has fallen precipitously and is rejecting on the underside of it. So we can potentially expect, yeah, we're going further down. Okay, so that is another indication that, you know, we are either finishing this fourth wave or pretty much within it, in the thick of it. And now the other idea is the Ichimoku cloud. So with the Ichimoku cloud, boom, what happens is we go right up into the Ichimoku cloud as resistance. And now the Ichimoku cloud is coming down. Okay, so here's our fib retracement around the 61.8%. The Ichimoku cloud coming down. And so is that going to be further resistance? Does the price have some steam to get up in here? My guess is, this is a pretty good level now. I'm saying the 61.8%. It might chop around and do its thing, but I think this level here, this 44,000 will tend to be, now of course I could be wrong, but I do think it'll tend to be the lows of this fourth wave move, even though the fourth wave might continue on a neo wave perspective. Now, speaking of which, we'll look at the time. But before that, I just want to also recognize we did the Bollinger Band, we did the Ichimoku cloud. All right, that's some stuff that I missed on the previous video. And that is it for our time frame. Yeah, good luck out there. Check out the other video if you want a bit more ideas and information. I just would like to use the line chart and say if we were to retrace the third wave here, again, it's about just between 50 and 61.8. So technically the price might like move up there and even close up here, do whatever it's saying. And, if it, yeah, it's just possible. But anyway, we are around a good spot of retracement for this general move here. And that's about it. Okay, so we go into the daily price chart for one last word, and then I'm out of here. Thanks for joining. Okay, I hope this 2 to 4 trend line thought process is working for you. Actually, we'll just leave it where the candlesticks are. And there you go. This is shaping up. I hope you stick around for more. We're just going to watch this play out. Let's see what happens. Okay, we're going to keep fishing our 2 to 4 trend line to find out where is it going to be placed. And yeah, looking forward to finding out with you. Okay, stick around for that. And on the daily time frame, who knows what's going to happen here. It's chopping around, but yeah, it looks pretty decent. And I want to recognize a couple of things. One of them, let's go back on the 4-hourly. I wanted to mention the time frame. So if we're going to take this one wave and compare it with this 1 to 2 wave, so the 2 wave, compare it with this potential 4 wave, we're just going to see where we are roughly. So we are going to take the fib, and we're going to say, we've said that it's ending roughly here, and I have my reasons, but I don't want to get into it right now. And then we're going to go there. That's your 2. And then if we say, well, on the closing basis, here is your end of your move. So if you're going from this layer, then already around your 61.8%, you're turning around. So the 4 is 61% of this 2, which is fair. It's fine. But even if it's going for 1, then you're talking like around 15th of January turnaround. If you're going for a 161.8, that like now you're going for potentially an extended 5th wave here, where the 5th wave actually is like 161.8 or maybe 1 to 1 of this whole move. That would be a challenging thing right there. Like if we go 1 plus 3 type of thing, and extend it that way, that's too massive for my tastes. That's pretty big, because then no, that's not where you're going. That's not how that move works. So yeah, generally what I'm saying here is, if we take this idea here, we see that that we're already at a 61.8% potential turnaround here, which that's fine. That makes sense. It's a bit more angular. This one's more flat and sideways. So that's cool. That would be interesting. 1 to 1 is around here again, like I said, 15th January. So there you go. And if we use the other level here, the wicks, let's just go with the wicks for all the friends who like the intra trading prices, and it is important data, of course. Let's go here and take that 2 to 4. Oh wait, my bad. Let's just do it again. Sorry, this is taking longer, but I just want to get this. So we said the 1 wave here. We'll do it both ways. So okay, fine. We'll place it here, and we'll go to the 2 wave, and then we'll compare with the potential. What do you call it? 4 wave, and yeah, roughly around there, 61.8% turnaround. So that the amount of time that it took to do this potential two wave is about 61.8% of this one. I'm not going to do it all the ways. It's roughly the same whether you start from here or here, and you know it's a pretty good move. So we'll see if that plays out in what way. But there you go. There's some time analysis for you as well. Okay, I'm out. Until next time, I am wishing you all the love, peace, and happiness that you can manage. Study up, and talk to you soon. Goodbye.